Welcome to the Valuation Desk by Highland Global, where SBA business valuations speak bank. Today we're diving into machinery and equipment appraisals, a discipline that's a perfect partner to business valuation and a game changer in SBA lending, litigation, and asset-based financing. Let's jump in! Machinery and equipment, call it M&E, are often a huge chunk of a business's balance sheet. Whether it's an SBA loan, a business sale, or an estate dispute, M&E appraisals tell you what those tangible assets are really worth. In this session, we'll cover what M&E appraisals are, how they're done, the types of value, and why they're critical, especially for those of you navigating SBA deals. So, what's an M&E appraisal? It's an independent, well-supported estimate of the value of physical assets. Think production machinery, vehicles, kitchen equipment, or medical tools. Unlike business valuations, which look at the whole company, M&E appraisals zero in on specific tangible assets. They answer, what's this stuff worth on its own? M&E appraisals pop up in all kinds of situations. Loan collateral for asset-based lending, mergers and acquisitions, bankruptcy or liquidation, divorce, estate, or shareholder disputes, insurance coverage, tax and depreciation planning. Anytime someone needs to know the value of hard assets, an M&E appraisal is the go-to. Let's talk about value definitions because picking the right one is crucial. Here are the big ones. Fair market value, the price a willing buyer and seller agree on in a normal deal. Fair market value installed includes setup and installation costs. Fair market value, in continued use, assumes the asset is working in a live business. Orderly liquidation value, what you'd get in a controlled sale with time to market. Forced liquidation value, auction value in a rushed, distressed sale. Replacement cost new, cost to buy a brand new equivalent today. Insurance value, usually replacement cost new minus depreciation for insurable purposes. Match the definition to the appraisal's purpose, collateral, sale, or insurance, and you're halfway there. How do we actually value these assets? Let's break it down. The cost approach is the workhorse. You start with, what would it cost to replace this asset today? Then subtract physical depreciation, wear and tear, functional obsolescence, outdated tech, economic obsolescence, market or industry shifts. For example, a 10-year-old CNC machine might cost $150,000 new, but after wear and newer tech, its value drops. We use sources like manufacturer quotes or industry databases to nail this down. Next up, the market approach. Think comps like real estate. We check recent sales on platforms like Machinery Trader, then adjust for condition, brand, usage hours, or freight costs. It's all about what the market's actually paying. Finally, the income approach, but this one's rare. You'd only use it if the equipment generates its own income, like leased gear or specialized machinery charging tolling fees. Not common, but it's in the toolbox. Let's talk standards. M&E appraisers must follow USPAP, the Uniform Standards of Professional Appraisal Practice. It's the gold standard for ethics and appraisals. Want to know if your appraiser's legit? Look for these credentials. MCEA from the NEB Institute. Their Certified Machinery and Equipment Appraiser, CMEA credential. ASA, the American Society of Appraisers Machinery and Technical Specialties designation. These are the badges of trust in lending and legal circles. Now let's zoom in on SBA lending, crucial for many of you. Doing M&E appraisals for SBA loans isn't always smooth sailing. Here are some real-world hurdles. Limited data. Specialized or old equipment often lacks good market comps, making valuation tricky. Condition, questions. Figuring out an asset's wear, tear, or remaining life takes hands-on expertise and inspections. Picking the right value. Choosing fair market value. In continued use versus orderly liquidation value depends on the loan's goal, and it's not always obvious. So how do M&E appraisers tackle these challenges? Here's what they do. Tap multiple sources. Use auction data, manufacturer quotes, and other guides to fill data gaps and back up your numbers. Get hands-on. Inspect equipment in person, take photos, and note technical details to confirm condition and obsolescence. Be clear on value. Establish the value definition upfront with the client and tie it to the loan's purpose, like collateral for a working business. These steps make the appraisals bulletproof. A top-notch M&E appraisal report has a detailed asset list, make, model, serial numbers, condition, photos of key equipment, value definitions and scope of work, a summary of methods and how they're reconciled, Assigned USPAP certification with assumptions and limits. It's got to be thorough but easy for lenders, attorneys, or buyers to understand. To wrap up, M&E appraisals aren't just a box to check. Done right, they bring clarity to loans, sales, and disputes. Thanks for joining us for this episode of the Valuation Desk. When you need clarity, confidence, and credibility, experience makes all the difference. At Highland Global, every appraisal is backed by decades of expertise and thousands of completed reports. We don't just crunch numbers. We provide insight, context, and defensible conclusions that lenders can count on. Whether it's a business acquisition or equipment appraisal, our seasoned approach helps ensure your deal moves forward with precision and trust. For more information on valuation-related topics, be sure to visit our website, highlandglobal.com. Lenders know experience matters most.